it's Wyatt Smith, founder and CEO at UpSmith. We're excited to be joined on our next episode of Untapped with UpSmith by Caleb McCasland. Caleb, welcome. Really excited you're here and excited to learn from you.
Yeah, absolutely. Thanks, Wyatt. Appreciate the invite over. Got a good view of our offices from here. I think I can actually see my window, so it was an easy walk over.
We wanted it to be an easy commute for you. Yeah,
that's it. You guys do a great job of that.
Caleb is an investor focused on the middle market in the private equity world. Very focused at Patriot around businesses that are building in the services sector, and that's an area that we think a lot about. And so wanted the chance to have you on to share more about what you're seeing and share that with our audience too.
Yeah, absolutely. I think Patriot's mandate fits well with both what you're building at UpSmith and what most of the clients that you serve are building in the trades. So I'm excited to dive into that today. I have an interesting background in both middle market investing as well as covering technology. So I think it'll be an interesting discussion.
I'm fired up to have it with you. It'll be fun. Why don't you start just by giving folks a little bit of an overview on Patriot, and we'll frame that you focus on professionally, and then hear a bit more about your story from there.
Yeah, so Patriot Capital is a lower middle market private equity fund. We are investing out of our sixth fund right now. The firm's been around for about 25 years and has invested in about 170 different businesses over that time. Mm-hmm. We will invest in just about any kind of operating business. The only things that we don't invest in are oil and gas and real estate, not because we don't like those markets, because frankly, they're subject matter expertise or experts who are just better than us in those markets. So what we focus on is businesses that have strong and defensible product market fit and excellent management teams. And from there, we like to say that we have almost infinite flexibility in how we structure an investment. So whether it is debt or equity, it's generally some combination of both. But if we can find the right people and the right product, then we can be very flexible in how we put together a capital stack that supports the growth for, hopefully a very long period of time.
That's awesome. Very cool. How'd you get into this line of work?
I can give you the long version or the short version.
Let's go with the long version. Yeah.
So I grew up.
Your story growing up.
Sure. Yeah. I grew up in Northeast Texas, out in a town called Atlanta. If there is a big city anywhere in the world, there is a much, much smaller version of it somewhere in Texas. So, small town, 4,500 people or so, very stable, if not slightly declining population. Worked there got into banking, went to undergrad at a Texas A&M system school out in Texarkana, about 30 miles north of where I grew up, and then got into banking at a very small bank. There were 6 employees, including myself, and kind of fell in love with finance, fell in love with financing businesses and operators, getting to meet people, hear their stories, hear about what they wanted to do, and be a part of the solution that helped them go out and do whatever it is that they were doing. Back then, 12 years ago, it was a lot of, in that part of the world, is a lot of timber entrepreneurs, for example, agricultural entrepreneurs, either farmers, ranchers, or folks that are growing trees and cutting them and working them through the timber supply chain. We ended up selling that bank to another regional bank, and I went into FP&A for a public school district for a short amount of time, for about 2 years. And I jokingly say that I hated every minute of that. It was very good from a discipline and a rigidity standpoint, sure, for a lot of things that came later in my career, but it was just much less interesting than financing people who were out in the world doing things. Right. So wanted to get out of that and get back into the world of finance. So ultimately left my hometown, moved down to Tyler, worked for a publicly traded bank out of Tyler in their middle market group for a couple of years, and then wanted to get to the city where there was more action, where there was more opportunity, both for business and for me. So moved up to Dallas, went to SMU, got an MBA, and through that I met a guy named Pat Hamner, who is an adjunct professor at SMU in their business school, but who also started the Patriot Capital office in 2012. And he's done a great job of carrying the flag here. We joke that he knows everybody. But I met Pat and resonated with Pat and everything that he had done and what he wanted to do, which at the time was retire. So this was originally met Pat in 2021. So started building the Patriot relationship there, and then was working as a banker. And in 2021, I had gone into business school with the intention of leaving banking to get into private equity. I took a little bit of a detour and got the opportunity to build what turned out to be a really special group for a gentleman here who is offices in the new addition at Old Parkland named Sam Susser. And what Sam wanted to build was the next great Texas bank. So originally joined to help him build his Dallas office. And then about 9 months after that, which kind of dovetails nicely into the UpSmith story, was paired with two other individuals who were coming over from another institution to start a technology banking group. So over the course of 2021 through 2025, or 2024, excuse me, we built a technology banking group focused on B2B software, tech-enabled services, businesses across America. We invested in 43 transactions. It was about 30 platforms and about 13 add-on transactions. We invested about $230 million of capital to support, largely to support founders and growth investors who were partnering with founders and entrepreneurs to go out and build businesses across the country, and even up into Canada, over to the UK, and down to Australia. So got a lot of really good experience, but meanwhile maintained that relationship with Patriot and really liked what they were doing, and wanted to be able to invest deeper down the capital stack. So the Susser platform was debt only. And there were many times where we would see an opportunity to back an entrepreneur, to back a founder, to back a management team, deeper down the capital stack than debt, but didn't have a vehicle through which to do that. So we'd bring Patriot in to look at an equity investment or to look at a mezzanine debt and equity co-investment in those opportunities, and got to go through several cycles with the team at Patriot. And ultimately, we all kind of realized we worked the same way. We had the same work ethic. We liked each other. We liked working together. And they eventually reached out and said, hey, Pat really wants to retire, and he's got some nonprofit things he's doing. He's very involved in the community here. He wants to be able to focus on that. And we want to build out the investment team. We think, that Texas and the greater southern states are an excellent place to invest capital, an excellent place to partner with entrepreneurs to build businesses. And, would you be interested in coming over to join us to do that? And I said, yeah, absolutely. So we spent about 4 months dancing around each other, kind of putting together a deal. And then I let the Susser folks know that I was going to be going over, and they were gracious enough to be very supportive through that. And took a short garden leave and transitioned most of the deals that I had done over to other members of the team, and then started with Patriot just about 18 months ago now.
Yeah,
so.
Fantastic. So there's a lot to explore. I think a number of people watching, maybe entrepreneurs themselves or people that run a trades business, and they're thinking to themselves, gosh, when a middle market private equity firm comes calling, like, what are they looking for? What are the ways that you would assess a business or assess an entrepreneur when you're contemplating a partnership?
Yeah, I think one of the most interesting things that we see in the lower middle market is just the variety of data quality that you get, right? If you are a founder or an entrepreneur, or even someone who has acquired a business and is operating it, and you want to partner with private equity, for example, or you want to borrow money for growth capital, one of the first indicators of really the health of your business is the quality of your financial statements, and how accurately and articulately you can present those financial statements, right? And then I think secondary to that is the quality and availability of the management team, right? There is a bar with financial, reporting and KPIs, but that's really kind of the first layer, right? The real hurdle is the quality of the management team, right? And that quality means a lot of things, right? Culture, cohesiveness, experience, effectiveness, all of the different words that you can throw out. But from the earliest part of my career, I was always taught that people pay you back, right? And that's obviously a debt-focused mindset to have, but
Right.
if you back tested the entire 170 investments that Patriot has ever made, we've done this. This is a frequent summer intern project for us, right? Is back test the returns and try and find something to correlate them back to, and the answer is the quality of the management teams.
That's interesting. So I'll paraphrase what I heard you say. Number one, how good are the books? Number two, how good are the people?
I think that's accurate. I think it's are the books good enough to get us what we need?
Right.
And then one layer beyond that, you don't have to have the best financial reporting that we've ever seen, right? You don't have to have the cleanest, but does it meet a standard that we can feel good about the accuracy of what you're reporting? Right. That's kind of the baseline. And then beyond that, it's truly, do we feel like this management team is backable? Are these guys that, something's going to go wrong, right? Nothing is going to go perfectly over the course of a 7 to 10 year investment. And when that happens, are these guys that we want to be in the trenches with?
And so the philosophy that sounds like you all take is this is a team you're wanting to back and keep in place. And not every private equity investor has that mindset. There's a number that choose to rotate people through. What's led you to that philosophy, and what have you learned as you've executed that strategy?
It's a lot easier to pick, people to bet on from the beginning than it is to find them afterwards. Yeah. And we are not control investors, right? We are growth investors. We don't come in and take control of your board, for example. We don't come in and, mandate that you do certain things. Instead, the approach that we take is we find businesses who are doing the things that we would want them to be doing, right? So that there's not this radical shift. And that doesn't necessarily mean that every time we invest, the CEO that we invest behind is the CEO who's there whenever we exit. Certainly things happen, people grow, organizations change, but the things that we look for in a business are somewhat different than someone who's looking to buy the business and combine it with 5 other businesses and, put a new, install a new leadership team. There's a lot more risk with that, and there's a lot more friction with that process.
Reflecting on maybe a business that you've invested in that's in the home services sector, that's in the world of HVAC replacement, repair, plumbing, that sort of thing. What's your current take on the market? What are the big trends that you're tracking? If somebody's listening right now, what are the core things that you as an investor are keeping your eyes closely focused on?
I think we have a lot of experience in the space, both rural and suburban. I think the thing that we look for beyond what the two things that I kind of described, like the baseline financial reporting, the ability to evaluate KPIs, the things that we're looking for are really quality of brand in the market. Are you someone who your customers view as reliable, as expedient, as someone that can be trusted to come out and do good work and stand behind what you do? And the reason is that all sounds very well and good, but the reason is over time, those are the businesses that are going to be successful. Those are the businesses that are going to be resilient, right? Because if you have a bad name, then you may have really good financials for a short period of time. But over time, that's going to decline as people look for quality. And that's, one of the things that we pay a lot of attention to, is that.
Is the key metric there Google reviews? What are the things you look at to assess brand?
We look at a lot of different things, right? Google reviews are one of them. I jokingly not Better Business Bureau reviews, because the only people who ever write those are angry.
Yeah, something mean to say.
Google reviews are part of it. I think you do tend to get a little bit of bias there in terms of, you don't get a lot in the middle, right? The people who write reviews to the public are generally either very happy or very upset with the service. So we do look at that. We do look at, things from sources from the internet. Another thing that we look at is just how recurring is the revenue from your customer base, right? And that goes back to that granularity of financial reporting, right?
Mm-hmm.
If you can show me that, Mr. Smith has, called you to service his air conditioner every summer whenever it starts heating up for the last 10 years, right? Or if you can show me that 35% of your customer base has called you every summer for at least the last 5 years, or there are trends within the financial reporting and within the operational reporting that we can really use to validate that.
Yeah, repeatability revenue, turns out.
That's right.
That's an important thing.
Yeah, that's right. That's right. It goes back to my software days.
There you go. Talk to me about technology, speaking of software, that you think makes the biggest impact right now, and anything that you're keeping a close eye on with regard to how AI is being used in the trades.
Yeah. So huge question, huge opportunity, but something that everybody everywhere is talking about, right? There are constant conversations going on in service businesses, in the investment community, in the operating community, in the entrepreneur community, about how to use technology without succumbing to kind of the flood of the early adoption curve, right? And one of the things that we look at is how manual are your business processes, right? How many things like headcount to revenue. And you can call that a number of different things, FTEs to sales or whatever. But how many humans does it take to support your technicians in the field, right? The ratio of administrative and support staff to field technicians, right? And that gives us a pretty good idea of how efficient your back office is, right? How efficient your operation is. And technology, especially things like what UpSmith is building, have enabled a lot of firms to stand apart, a lot of trades businesses to stand apart in that, because they can have much higher ratios of technicians to support staff through doing things like automating, the CPQ aspect, right? Your configuration, pricing, and quoting, through automating your kind of tier 1, tier 2 customer support. That allows you to, invest more into technicians in the field.
Yep.
Than back off.
I love that insight. I mean, thinking about your percent of revenue that goes to indirect labor, to things that aren't necessarily impacting the customer experience. And as you use technology as ways of giving way more leverage so you can grow your business without having necessarily add more folks in the non-customer facing roles, that's really powerful. It also is interesting because then it frees you up to invest in your workforce, to invest in hiring new people and training them. And that's really cool too, because it helps attack this much bigger problem for our country, which is really powerful. I'm curious about an anecdote or a company you really admire who you've watched apply technology to solve a problem like this, that you might speak about the entrepreneur or speak about the team in a way that could be a lesson for someone else out there listening on how they might approach it themselves.
Yeah, I can give you one that's close to home. We have invested, at least for you, right? It's right down your fairway in terms of an HVAC business, right? We've invested in businesses in the past who, have had varying degrees of adoption or, effectiveness in adoption of technology. And going back to what I said earlier, over the course of a 5, 7, 10-year investment period, something is going to happen, right? So, without giving too much away, we invested in a business a number of years ago that was going through some operational changeover. They had rebranded a couple of times. out there in the market to try and get away from some of the things that I referenced previously, some of those not ideal.
Stubbed their toe a couple times.
Sure. Yeah. And what they ultimately found was that when you do that, if you rebrand out of a good brand, then you can certainly lose brand equity really quickly, but it's a lot harder to rebrand out of a bad brand. Google's pretty good at, if you search the old name, they'll send you to the new name and say formerly known as, or they'll say something, there's some parenthetical there. So long story short, we invested in a business, that had rebranded a couple of times in recent years. And what we found was ultimately that the management team was not prioritizing the things that we talked about, right? And a lot of the things that I talked about earlier that we do prioritize come out of learnings from that investment, right? So they were not necessarily providing the highest quality service. They were not necessarily standing behind the service that they did do, and that started to surface in declining revenues. And you think, well, how does that happen? How do you tie those two things together? And you do it through financial reporting, right? You stop seeing the recurrence of customers, right? Mr. Smith stopped calling for your annual service because last time you did the annual service, you charged him for a bunch of things that you didn't do, or you kind of did and didn't do to the standard.
Yeah, bad experience.
Sure.
Yeah.
Ultimately, what ended up happening there was we partnered with another operator who was very experienced, was a second generation operator, had his family name on the business, and he came in and revolutionized that business and has done a lot of things to enable it technologically. Things like putting in a Service Titan instance and having everything ran through that as opposed to a ton of Excel spreadsheets that are hard to track and don't necessarily update one another dynamically, right? Things like, optimizing routing and dispatch and response times, and being able to track, how many customers call you back out within a certain period of time after your service visit, things like that, that start to correct some of the service-based issues, right? And then the other thing that we saw over time is that once some of those service-based issues were fixed, once some of that technology was implemented, then you start seeing growth in those, in the ratio of field technicians to back office or administrative support personnel, right? You can actually, once you have the demand pulling more field technicians in, you can start hiring more field technicians, investing more in trucks, and having more people out in the field versus in the office.
Yep. That's great. Well, kudos to that entrepreneur for embracing technology. That's really powerful. So let's do a bit of a lightning round here at the end. It's fun to learn from you and have some insights to share with other people. You're a big student of business. You're reading a lot about different things happening. What's the best book you read, either all time or recently, that you would commend to others?
Interestingly enough, I don't think it's, I guess it would be classified as a business book. My favorite book is Extreme Ownership. I think it can be applied to just about anything that you're doing in life. Business is, not that much different than most of the other things that we do in life, whether it's managing the relationships that we have, or whether it's, the way that we carry ourselves every day. But I think that book does a great job of, instilling simple to understand practices for personal accountability, how to build a team, how to manage a team, that I think are pretty universally applicable.
Mm-hmm. That's a good recommendation. Not the first time we've heard it on the podcast, as it were. Yeah. Productivity hacks, things you do to make yourself more productive and impactful.
I schedule things that need to be done, or that are higher, prioritize everything that you need to be done, right? How soon and how pressing is this issue? One of the most interesting things that I've learned over the course of my career is there are certain times of the day where I am more productive, and I can tell you what those are. They're from about 9 a.m. to about 2 p.m. I don't eat lunch most days. So, the things that I need to do that I know are the most pressing, that are the top priority, they they get done first. And that sounds simple, but if I was the most productive between 5 and 8 p.m., then I would put those things done between 5 and 8 p.m., not necessarily first in the morning. And I'm, very routine based, try to be disciplined. So I go through the same routine, from kind of 7 when I wake up to 9 whenever I start. There are administrative tasks, responding to emails, things like that are kind of lower. But I know that once I've gotten, time to wake up, my body's had time to go through its morning routine, and I have my, I've eaten breakfast and I've had my caffeine for the day. There's kind of a peak of productivity that I can, tell you. And if I go out and I have a business lunch, or if I eat a big lunch or whatever, it kills it.
Yeah.
So
there you go. You're a relatively new dad, if memory serves.
Well, relatively or extremely. My son was born on the 24th of October, so just about 10 days ago now.
Yeah. Congratulations.
Thank you.
Congratulations. Being a dad's awesome. So my last question for you is kind of in that context. Like, normally I ask people about advice they would give to their past self if they were giving counsel, but you now have a son to give us some advice to. So thinking about lessons you've learned in your career so far and habits that have served you well, what advice are you thinking about that you would project forward?
That is certainly a profound question. I think the first piece of advice that I would say is don't give up. If you have a dream and you have something that you want to do, don't give up on that. And then, the second piece of advice is don't ever let anybody tell you that you can't do something. There are people in the world who are just going to tell you that you can't do things no matter what they are. But on the other side of that coin, there are people out there who are going to help you, who are going to enable you to do those things that you want to do, no matter what they are. And that would be the piece of advice, just kind of looking back at myself 10, 15 years ago. I had a college professor whose name I won't say, one time say, "You're never going to leave here and go work on Wall Street." All right. So I did end up going to SMU. Shout out to SMU. Love the school, love the program, love what they're doing. But to that guy, I would say I'm on the board of a company that might not be on Wall Street, but, we're on 44th.
I think you've achieved the spirit of that. That's a really good piece of advice for anybody. I'm grateful for your time. Thank you for sharing some advice for listeners on Untapped with UpSmith. Really excited to share these insights with others and excited to see what you build from here.
Yeah, absolutely. Thanks so much for having me. I'm a big fan of what you guys are building, and I look forward to all the things you're going to do in the future.
Amen.